The show where we take those dense, complex reports and, we turn them into sharp, clear knowledge you could actually use. It's the shortcut to being instantly well-informed. Today, we are jumping into the aerospace sector. Specifically, we're looking at the absolutely blistering performance of Rocket Lab, that's ticker RKLB, and we're asking the big question, is this just a hype bubble? Or is the engine really just starting to fire? And if you've glanced at the charts lately, you know the drama is real. This stock has been on a nearly parabolic run. We're talking a massive 174% climb over the last year.
And it just recently smashed past the $85 mark, right?
Yeah.
Hitting brand new all-time highs here in early January 2026. It's been an absolute tear.
It really has.
And that kind of run, that kind of velocity, it just immediately triggers one, very urgent concern for pretty much every investor out there watching this.
Is it too late?
Is it too late? Given that huge run-up, has the market already priced in all the good news? Have you missed the boat?
That is the exact question our source material tackles. We've got a deep analysis report here that addresses this head-on. And their conclusion is, well, it's firm. And frankly, it's pretty provocative.
What's the bottom line?
They say, absolutely not. They honor this 174% surge isn't the finish line at all. It's actually the starting gun. It's a signal marking this huge structural transition for the company.
Right. The analysis makes the case that we're watching RKLB move past being just a speculative startup, a high-risk, high-reward launch company, and into the territory of a legitimate defense prime titan.
And that shift changes everything about how you value the company.
Completely.
So our mission today is to break down that thesis. We're going beyond the chart to look at the three massive specific catalysts this analysis predicts are coming in 2026. Catalysts they believe will send this stock towards $100 and maybe even beyond.
Yeah, this is less about simple growth and I think more about a complete evolution of who they are as business. It's a diversification story.
Okay, let's unpack this. Let's start with what the analysis calls the foundational shift. The moment RKLB really cemented this new identity. Catalyst number one. The $816 million prime signal.
This is a huge, huge watershed moment for the company. Rocket Lab secured a staggering $816 million contract with the U.S. Space Force.
And just for context, that number is...
It's not just a big number. This is RKLB's single largest contract ever, and by a huge margin.
The scale is eye-popping, but it's the details here that really matter. This isn't just a contract to launch a few more things on their little Electron rocket. The Space Force is paying them to design and build 18 incredibly complex missile tracking satellites.
Exactly. And specifically, these are for the Space Force's Tracking Layer Tranche 3. Now, for you listening, this is the real so what of that defense prime argument. This isn't some side project. This satellite layer is the future high-stakes infrastructure for detecting and tracking advanced missile threats.
So a top national security priority.
A huge one. And that sounds like a massive technological leap for RKLB, right? I mean, we're talking about moving from just providing the ride to space, which is basically a transportation business.
Right, a very specialized taxi service.
A taxi service, yeah. To now creating the actual highly specialized cargo itself. The complexity there is on another level.
What does that mean for them operationally?
It means they've successfully passed this incredibly rigorous vetting process. I mean, the analysis points out that the real barrier to entry here isn't just the tech, it's trust, it's security clearance, it's proving you have institutional reliability.
So they're not just beating other startups.
No. When they won this, they proved they belong in the same tier as the traditional giants. We're talking Lockheed Martin, Northrop Grumman. This is them graduating to the major leagues.
And that, crucially, changes the nature of the money. Launch revenue it's transactional. You launch, you get paid, you hope for the next one.
This is completely different.
Systems revenue, especially from the government, just feels different, more stable.
It's an entirely different business risk profile. The analysis really emphasizes this. This contract validates their whole space systems strategy building, the components, the satellites, not just the rockets. And for you, the learner, that government-backed revenue is incredibly sticky.
Sticky, I like that.
It provides this long-term safety net against market volatility or, a launch failure. Wall Street is finally waking up to the fact that this de-risks the entire company.
Okay, I see the stability argument, but I have to, push back on that a little. RKLB is known for its fast-moving, high-energy startup culture. Now they're in the defense world, dealing with bureaucracy, certifications, slow payments. Is there a risk this actually slows down their innovation?
It's a very fair question. The analysis does touch on this tension. But it counters by saying RKLB is kind of uniquely positioned. They're bringing the efficiency and the low-cost manufacturing of the new space era into the legacy prime's sandbox.
So they're shaking things up.
Exactly. And while that defense work is slower, the financial certainty it provides is enormous. It lets them fund their high-risk, high-reward stuff, like Neutron, without constantly having to go out and raise more capital.
So it's basically a subsidized R&D budget.
That's a great way to put it. This contract essentially de-risks the entire enterprise. That 174% run wasn't just hype, it was the market realizing they have secured their future almost regardless of what happens with their commercial launches.
A total re-rating.
A total re-rating based on that secured long-tail revenue. Okay, so let's pivot now to the second major catalyst. We're moving from the stability of government contracts to the sheer raw power of their future commercial capacity. We're talking about the Neutron rocket.
Ah, Neutron. This is the big one.
It is. This is RKLB's biggest bet, and for years it was basically just concept art and a future promise.
But the analysis says 2026 is the year it moves from concept to reality, and it could transform their revenue potential like overnight.
That timeline is absolutely critical. The first launch is targeted for the first half of 2026. So this isn't some distant dream anymore. It's an immediate near-term catalyst that the report believes the current stock price still doesn't fully reflect.
Right. And we really need to talk about the math here, because the financial comparison in the analysis is just staggering. RKLB built its business on the small but very successful Electron rocket.
Electron is fantastic for what it does. It's like a precision courier service for small satellites.
Yeah.
But Neutron is the heavy-duty semi-truck of the fleet. It's a medium-lift rocket, reusable, designed for much, much bigger payloads.
And the numbers are just, yeah. The analysis says Neutron is expected to generate roughly 6 times the revenue of a single Electron launch. That jump is massive. What's behind that 6x? Is it just a bigger rocket?
It's more than just mass. It's the entire market segment it unlocks. You see, Electron serves the small sat market, which is competitive, it's a bit niche. Neutron lets RKLB compete for the big government launches and, crucially, for the massive commercial mega constellations.
Like Starlink.
Exactly. Think of the difference between shipping a priority envelope versus moving huge, standardized cargo containers across the country. Neutron opens up access to these higher value, higher margin payloads.
And that mega constellation market is key because for years, that segment has been, well, some would say monopolized by SpaceX.
It absolutely has. And the analysis says the market is starving for a second option besides Elon Musk.
They need redundancy.
They desperately need redundancy. If you're planning to deploy thousands of satellites, relying on a single provider is a massive strategic risk. What if their rocket has an issue? Your whole business plan is on hold. RKLB, with Neutron, is positioned to become the only viable flight-ready alternative in 2026.
So it's not just about getting a slice of a new pie, it's about fundamentally disrupting a near monopoly.
Yes. When Neutron lifts off successfully, the impact on their total addressable market is exponential. It doesn't just grow, it multiplies. Because they can suddenly serve customers they were completely shut out from before. This is the difference between 2025 RKLB, a specialty company, and 2026 RKLB, a full-service space systems and medium-lift provider.
It's easy to get excited by all this, but okay, let's connect these two massive catalysts, the defense contract and the Neutron rocket, back to the current financials. What are the concrete numbers that are grounding all this optimism?
Well, the current momentum is powerful. It shows they're already executing, which is why the market is reacting. They just posted record revenue, $155 million in the most recent Q3. That shows the existing business is already firing on all cylinders.
But the number that really tells the story of the future is the backlog. You can't fake customer confidence.
Precisely. They have a record backlog of over $1.1 billion in signed contracts just waiting to be fulfilled. This is guaranteed future revenue. It's the hard evidence supporting the whole thesis.
Okay, a $1.1 billion backlog is a huge number, no doubt. But with the massive R&D costs to get Neutron flying and the complexity of that huge Space Force contract, is that $1 billion really enough of a runway? Could they still hit a cash crunch if Neutron sees delays?
That's where the structure of that defense contract is so vital. That $816 million, it isn't just a lump sum at the end. It comes with progressive, predictable payments tied to milestones, which helps absorb some of that R&D risk.
So it smooths things out.
It does. And the analysis argues that the $1.1 billion backlog, which is a mix of high-margin systems work and guaranteed launch slots, is a strong enough base to handle the inevitable bumps in the road. The market is betting on their execution, which they've already proven.
All right, let's pivot to the technical side of this, because the stock price itself is telling a story. The analysis uses this fascinating term, the blue sky breakout. What does that actually mean for someone watching the chart?
It's a key technical signal. It happens when a stock breaks through its previous all-time highs. In this case, getting past that resistance around $88. Once it's in that territory, above $88, there is literally no historical resistance.
Because it's never been there before.
It's never traded there before. So you don't have this group of prior investors who bought at, say, $90, just waiting to sell as soon as it gets back to their entry price.
Yeah.
It's truly charting new territory.
It's frictionless territory.
Potentially, yeah. In normal circumstances, a 174% climb would have all the alarms going off about the stock being overbought. Analysts would be screaming for a pullback.
But the report suggests that's just not relevant here.
They argue those technical anxieties just get bypassed. When a stock enters blue sky territory and it's backed by immediate, massive, fundamental catalysts like a billion-dollar backlog and a product that could 6x your revenue per launch, the momentum is just too powerful.
It's complete re-rating. The price action isn't just excitement, it's the market fundamentally reassessing the company's long-term value.
Exactly. The price below $88 was for the old company. The price above it is for the new one.
Okay, so if we pull this all together, the report is maintaining a very confident buy rating, even after this huge run. The analysis basically concludes that the 174% gain we've already seen was the market just pricing in survival.
Right, it was relief. Relief that RKLB pulled off its plan and secured its financial foundation.
And here's where it gets really interesting for the future. The report says the next leg up, the push toward $100 and beyond in 2026, is the market starting to price in dominance.
Pricing in RKLB as a core dual-threat player in both defense systems and medium-lift launch. That's a whole different ballgame.
And they give a really tactical suggestion for you, the learner, to consider if you're looking at the long term at 2026 and 2027.
They argue that since the company is building this critical infrastructure for the future space economy, any short-term dips in the stock price, say it pulls back to the $80 to $82 range, would just be market noise.
The temporary correction.
Temporary correction, yeah. And the analysis characterizes those dips as a golden entry opportunity. Given the stability from the backlog and the near-term neutron catalyst, those dips would be seen as just an aberration against the real fundamental strength.
It's a fantastic case study in how a company can completely break its valuation ceiling.
Not with minor improvements, but by fundamentally changing its entire business model and its relationship with risk.
It is. So what does this all mean for you to think about after this deep dive? We've talked about the finances and the strategy, but consider the long-term internal implications.
Yeah, what systemic and cultural changes does a company like RKLB have to nail to pivot from that quick, small batch revenue of Electron to securing massive defense contracts that need incredible oversight and simultaneously compete in the high-volume, reusable launch market with Neutron?
It's a huge operational challenge, and if they pull it off flawlessly in 2026, does it fundamentally alter how governments view risk? Does it trigger a bigger shift away from the legacy primes and that one dominant commercial player?
That's the real dominance the analysis is talking about.
That is the question that could define the space economy for the rest of this decade. Something to think about as RKLB charts its new territory in the blue sky.